Hi guys. This will be a bit of a long video. There is quite a few things to update all of you, but I'll try and keep this as simple as I can. I am talking with a bit of a note, so don't mind me if I pause and think for a moment lah. Now, if you look at the screen, this is a good start to 2024 could mean that the bull continue. Okay, so S&P performance when there's more than 5% year-to-date return in February. This is a report that I pulled from Carson, and you can see that with the max year-to-date return in February, which is most of the time green because this is when the performance is more than 5%. The final 10 months of the year, we were higher 89.3% of the time, and for the rest of the calendar year, we are higher 92.9, almost 93% of the time. There is only two instances in 2011 and 2018 whereby we were negative at the end of the calendar year. Okay, so 93% of the time we will end up higher than where we end off today, and we have a high chance of doing that lah. Now, something that I would like to share with you guys is that I found this Carson Investment Research for the outlook of 2024. It's a 30-page research. I will be summarizing certain key points that I have found useful in this report, which I have already sent in my WhatsApp group. I will explain verbally down here because it's much easier to understand through a video. Okay. Now, if you see that this chart, stocks have never been lower in an election year under a new president. So you can see that now this year is the election year. You can see that election year, it is green 100% of the time. It is green 100% of the time. How green can it be? 16.4, 13.4, 20%, 25%, 15%, etc., etc. So if we were to go back to here, and if you see that, next year to date return, now we are at 5.4%. How much higher we can go? Maybe, another 10%, another 15%, I wouldn't be surprised. Yeah. So, midterm wise, probably until the end of the year, I'll still remain bullish, but for February, please just be very, very cautious. Okay, and I will show you why. But before that, now we can see that inflation has pulled back a long way, a big way, whereby we were previously, back in June 2022, we were at 9.1%, and then we were having the bear market, and inflation started coming down. We are currently at 3.2%, if I remember correctly. So if you were to look at CPI, it came in at 3.1% last Tuesday, whereby it was higher than the 2.9% forecast, and the market plunged, but the market did recover, and I'll go through the chart in a bit. This is one of the economic valuation. One thing that I would like to highlight is that, can you see the large cap analysts rated as neutral, meaning to say large cap stocks, Apple, Meta, Netflix, Amazon, Google, all those billion-dollar companies, they are neutral. They are neutral, meaning to say that the gain might not be very, very high for the rest of the year, but the small and the mid cap stocks, they are overweight. They are overweight, meaning to say that they can have attractive returns over the next 1 year. And why is that so? Because the small and mid cap stocks, they usually need to borrow money in order to grow their businesses, in order to expand their business. And hence, if the Fed starts to lower interest rate, it may make their valuation more attractive, because then they will be able to grow their business, their P&L will look nicer, investors will be more happy, their forward guidance will also be better, and hence their share price will rise. Okay. And the last one is, now late February can be tricky for the bull. So we have already passed the 15th. Now it's already the 17th. So I will not be surprised, if the market starts to pull back and stuff like that. Okay, but then before that happens, let's just take a look at the charts first. Now, taking a look at the chart, this is the line that I have already drawn for the WhatsApp chat to take a look out for. And why is it so? Because we are in a very tight channel for now. Can you see that SPY came here, bounce off, go there, bounce off, come up. So it came back here, plunged down, and then now we are coming up here again. So what am I looking out for? So like in the last video, I was saying that if CPI plunged down, and then we may start to rally again. If it does not break this swing high, then we will start to chop around, and then we may start to see a pullback. To which, what am I looking for? I'm looking for this swing high. This swing high over here, which is about 503.45503 level. We went there and then we started to reject, and now we are bringing down lower. Can you also see that on the hourly time frame, the volume yesterday night, after it hit the 503 level, the volume started to increase. So there are more people trying to short the market now than to buy it. Of course, some people took the chance to buy the dip down here, and then after that it pushed up. Good for them. Sorry, I am not a day trader. I am a swing trader. So for now, there is absolutely no setup at all. I'm just waiting for the market to do its thing. If the market goes sideways like that for the next couple of weeks, and then we can draw our downtrend line down here, and we wait for the next breakout to the upside. That's perfectly fine. And so again, I would like to retaliate. If the market comes back down to this about 480 levels, I will not be surprised, because that is where the previous all-time high is. And I think I mentioned before, if we were to pull back from here to here, that is about 4.7%. The magic number for pullback is 5%. So I wouldn't be surprised if the market pull back to 480 levels, and then after that it starts to bounce off. A quick recap on the FIBO levels again. If you were to draw from the swing low to the swing high, we can see that the 482 level is down here. We drag it a bit further, we can see that the 480 level is down here. Okay, going to the weekly time frame, I'm going to a very, very long, very, very high time frame down here. If we were to draw the FIBO extension from the swing low to the swing high and back to this swing low, and then we drag it over, the market is very close to this 0.618 level. If the market were to somehow reach this level, I will expect some form of tussling and then some sideways movement, and we may drop back down to this 0.5 level. What was the previous swing high? 480. Can you see that this 0.5 feet extension is also where our previous swing high is. Our previous all-time high is. So there is a very strong level of confluence down here. If we were to draw the heat retracement from here to here, we can see that this 0.618 is also near is also at the 480 level, and therefore what can potentially happen if, let's say, the market does pull back to here, we may see a lot of buying, okay? Because what I want to share with you guys is, in a bull market, we want to buy at support. In a bear market, we want to short at resistance. Can you tell me if this is a bull market or a bear market? If you think that this is a bear market, you better go and get your eyes checked. This is obviously a bull market. How do I know that it is a bull market? It is a run up. It is an uptrend. It is an uptrend. Okay, it is an uptrend. If you don't know how to see an uptrend, just put your MA, your moving average of 50 days, 100 days, 200 days. The moment these three lines converge, MA50 pink, MA100 purple, MA200 orange, these three lines are in this exact order, this is a bull market. Can you see that once the line starts getting messy, this is a bear market. This is the bear market of 2022. And this is the bull market of 2020, where the US government, the Fed pump in money, was it Donald Trump? No, I think Biden pump in money to boost the economy. There you see that we have a bull market. This is how a bull market. Pink, purple, orange, we have a bull market. Very nice run up down here. If you short, you will die a terrible death. When it's here, pink, purple, orange, we have a very nice run up. Now again, it is pink, purple, orange. We have already a very nice run up down here. So I wouldn't be surprised that, if the market starts to pull back a little bit, and we can start to accumulate for our position trade. Now going back to the hourly time frame, we can see that, last week when the CPI data came out, came out on Tuesday. It plunged, it gapped down, and then after that it went further down. It went near the EMA 20, and then it continued to bounce off. Market gapped down yesterday because of PPI. So the PPI, the producer price index, shows the cost that the producer needs to produce the goods. Okay, so the cost has gone up, which means that inflation may be going up, but we wouldn't know until the next CPI. So inflation is going up generally is not a good sign. Therefore, market, get down. Market didn't get down. The opening is here. Market stayed flat, pushed down, and then after that we went back up again. Went to this swing high, and then after that it started to pull back. The other thing I wanted to add was there were a few false breakouts last week. So, for example, Meta, if you were to just draw your trend line from here to here to here, can you see that there was a trend line break? Meta went up, and then after that, yesterday it closed back down again. So there's starting to be a few false breakouts. I took DAL, which is Delta Airlines. Why did I take Delta Airlines? Because I saw a ascending triangle setup. Okay, I saw a ascending triangle setup like that. And so this was the breakout. I took it yesterday. I took it the day before, and then after that it got stop loss yesterday. So then it came back down to this triangle again. So it was a very small trade. It was a very small trade. So it was a very small loss, and I'm fine. I'm fine trying out to see that if the trade works out or not. So AMD as well. Took AMD. You see from here to here to here, there was a triangle from here to here to here. It broke to the downside. Sorry. This one. It gapped down, it broke to the downside, but people started buying it up, and then after that, so went long down here, it came back down, went back to my break-even price. So you see, it's coming back down to the triangle. What does this show you? This shows you that market is starting to get a little bit volatile. Market is starting to get a little bit volatile already, so it's not the time to go be greedy and things like this. There was a picture of Jeff Bezos selling Amazon stocks, and the last time Jeff Bezos sold his Amazon stock, that was where the market peaked. Okay, I'm downloading the photo for you guys. Just give me a moment. Sorry. I'm going to show it here. So the last time Jeff Bezos sold his Amazon stock was when about June, July, August, September, probably somewhere down there before the 2022 bear market. So could it be they know something that we don't know? I don't know. Or Jeff Bezos just moved to Miami and then he's trying to evade tax or something like that. Okay. But whenever a CEO or a chairman sells a lot of their shares, generally it's not a very good sign. Okay. Now let's just go back to the chart again. What I am looking out for the rest of this year, I will pay very close attention to IWM. IWM is the small cap stocks, the small and the mid cap stocks. Why is that so? Let me just show you why. Can you see that IWM has been very sideways since when? Since June 2022. IWM has been very sideways since 2022. It go down, come up, go down, come up, go down, come up, go down, come up. It's generally just not going anywhere. But one thing that I note was that it is forming a higher low. It is forming a higher low, a higher low, a higher low. And the IWM stock will flourish in a lower interest rate environment. So once the Fed starts reducing interest rate, I believe that the IWM stocks will start to move. What are some IWM stocks? For example, Palantir, maybe Snapchat, PayPal. You can see that all these stocks have been relatively downwards, and IWM has been generally sideways. Can you see that this looks very much like a consolidation? Okay. Let me find the Y cross distribution. Sorry, just give me a moment. I'm trying to get this picture up. Okay. So can you see that this looks a bit like a Y-cross distribution? This part here, okay, this part here may be looking like an accumulation. If looking like an accumulation, what it might do, it might just go sideways for a bit more, and then the moment it breaks out, please do not go long yet. Wait for a bit of a V-test or a sideways movement, draw your downtrend line, and wait for the next breakout to the upside. Okay? So why do I say so? Can you see that from 2022 to now, IWM is sideways. From 2022 to now, SPY is upwards. QQQ from 2022 to now, QQQ is also upwards. So IWM is the laggard. The laggard means that it is not moving yet. Okay, and since we are now at the QQQ chart, take a look at this very nice uptrending channel. It is now currently back at the support of 430. At a support at 430, the moment it breaks downwards, it may come back for a retest, and then if it drops further, then I think the pullback may come. Okay. US 10-year U. Can you see that US 10-year U came back to the 4.9 support and bounce off? Down here, this is the support, broke through, come back down to the support. This is the uptrend line, this is the confluence, and then it bounced off. So, can you see that this to here, to here, to here, this we have our downtrend down here, and this is a breakout for a major up and a current down. This is a breakout for the US 10-year. So if the US 10-year starts to rise, market will pull back as well. So this is the level, the next level that I am watching, 4.33. If it breaks above 4.33, then market is going to pull back as well. Gonna touch a little bit about HSI. So HSI, which is the Hang Seng Index, has relatively been a bit of a downtrend. It has been very difficult to trade HSI, and so this is the downtrend that we are watching. If we were to draw here to here to here to here, this looks a bit like a falling wedge. A falling wedge is a bullish indicator. So now, can you see that HSI is currently at the trend line down here? If it is able to break above this trend line and hold for the next couple of days, I believe that, it might start to slowly go up. There will be a bit of a monetary shift. So for example, if US stock is starting to pull back, the money got to go somewhere else, and it might go to HSI. What I want to show is also this MA50, and let me just remove the EMA20 first. So you can see that, we broke above MA50 down here, but then it didn't hold very well, and then we came back up to retest MA50 again, and then it started to plunge, came back up to retest MA50 again, and then it started to plunge. Now we have broke out. We have broke above MA50. If it holds above down here for a couple of days, that's a good sign. If it can break above this trend line, that will be an even better sign. Okay. The other thing that I want to show as well is resistance. So that we are currently at a bit of a resistance down here. We are making a higher low as well. So, you never know what the China stocks will do, because it is very, very manipulative lah. But one thing I can see from HSI is, from the China stocks is that BABA is looking like a inverse head and shoulder pattern. This is the neckline at $76. If BABA is able to somehow come up to $76, break above, come back for a retest, it may start to go up in the midterm in a couple of months lah. One stock that is in my watch list, I have entered Tesla for a very, very, very small position trade for now. So Tesla has been in this huge downtrend for months, since December. So SPY has been rising, Tesla has been crashing, and you see that this is the inverse head and shoulder. The neckline to the top of the head, the distance will be from the neckline to the run up. And so Tesla has this gap down here. It may come up to fill this gap fill. For those of you all interested in swing trade, you can watch for Tesla to go long. Now Tesla has not been respecting SPY or QQQ for the last couple of months, so I wouldn't be surprised if Tesla continues to rise even if the market drops. So then, where to draw your trend line? Now that Tesla is above EMA 20, just wait for a couple more days. If there is a trend line, draw your trend line, and if there's a signal to go long, the chapters combo, I will call out in the trade. I will be adding on this position as well. Okay. On the Tesla chart, there was something that I wanted to show. Should be, sorry, just give me a moment. So you see the trend based feed, if we were to take this swing high, swing low, swing high, can you see that this wave ended at the one level, which is the 192. Where is the 192? Down here. What did Tesla do afterwards? Tesla started to fly. Using the same principle, we have our swing high to the swing low and to the swing high again. Where did Tesla ended? Tesla ended at the one level down here, which is the 180 level. Okay, so what can Tesla do? Tesla could potentially do this bit down here for this area down here. We never know. But what we can do is we use technical analysis as well as risk management to manage our position and to manage our risk. One thing that caught my attention is with 1, 2, 3, 4, 5. Can you see that Tesla has already completed a wave 5 pattern? Once a wave 5 pattern is completed, a different pattern will emerge. And what is the next pattern that will emerge? I have no idea. We will just look out for it. Cloning the trend line, can you see that Tesla is in a very nice channel? It has been bouncing off. It is currently bouncing off this channel. It might come back to do this gap fill. It might also come back to retest this resistance. So after this gap fill, this resistance which is the gap fill, the next level is 225 area. And then if it continues to go up, the next level will be the 232 level and things like that. Okay, so be careful for the rest of February. I will keep you guys updated in the WhatsApp chat, please just be very, very cautious, because again, the fear and greed is again at extreme greed. Now we have hit extreme greed 3 times already. 3 times is the charm. And so if you see that this may be a potential triple top that the market can do lah, or the fear and greed can do. Okay, so be careful for the rest of February. If you have any setup to go long, go very, very small size, or just sit out for the rest of February. Just keep a lookout for China stocks. If they start to move, also just do small size, because China stock for 2023 has been a headache to trade. Okay, stay safe and good luck.